An incredibly risky way to purchase homes is making a comeback following the 2008 housing market crash, and many buyers are signing contracts that they don't fully understand thanks to the lack of regulation in this area. They're known as contracts for deed or lease to sell, or lease to buy, I should say. Now, an alternative way to purchase a house, a contract for deed, is a financial agreement in which a buyer pays the seller directly in installments, no mortgage, no bank. Now, people who tend to have either no credit or bad credit sometimes rely on this method of buying a home, but it comes along with many risks. And for a lot of people who sign on the dotted line, they don't fully understand what the risks or the terms really are. So again, it seems like an appealing deal. Some people make it work, but there is a catch or many catches. So for instance, until the final payment is made, the seller holds the ownership papers to the property, and the contract can be canceled by the seller if the buyer falls behind on their monthly payments. If that happens, the buyer forfeits all the money they've put into the purchase, including the down payment. The seller could then evict the buyer after as little as 60 days. Okay, so understand how these contracts for deed differ from a traditional mortgage, okay? Let's say you qualified for a traditional mortgage, you were able to close escrow on a property. You are able to, let's say, sell that property later if you built equity on it and you've made some money, right? Or let's say you want to take out a HELOC loan, meaning you borrow against your home if it has accumulated some equity to do home improvements or whatever. Let's say you have a family emergency that you have to pay for. That's what you can do with a traditional mortgage. Under these contracts for deed, you don't have that right because you don't really own the home. The seller is the person who owns the home, has all the documentation indicating that he or she owns the home, and they can actually pull the rug under you at any time in some states because there are so few regulations dealing with this. Let me give you some other examples. Unlike a mortgage from a bank, which typically needs to be paid off in 15 or 30 years, contracts for deed often come due in 5 or 10 years. Some contracts reviewed by ProPublica and Sahan Journal were even shorter. An assessment of the value of the house, known as an appraisal, is not required to determine the selling price. The buyer is responsible for all repairs and renovations as well as insurance costs on the property. So think about that. An appraisal is not mandatory, which is already a massive red flag. And what's happening is some of these sellers will buy a home with a traditional mortgage, and in some cases on that very same day, they will then sell it through this contract for deed method after jacking up the price significantly. Like literally close escrow on one day, and in that same day, sell it to someone who might not have good credit or no credit at all through contract for deed. Now, many buyers mistakenly believe, this is the most important part, by the way, many buyers mistakenly believe that if they make the monthly payments stipulated in their contracts, they will successfully pay off the home by the end of the contract term. But those payments may only add up to a portion of the price of the home, and the buyer is expected to make up the difference with a lump sum payment known as a balloon or by refinancing the loan. The lenders almost have an incentive for the contracts to fail. They get the home and they get to pocket the payments. So think about that. I mean, it's making money essentially off of kind of scamming people, right? Because if you're not clear about the terms of the agreement, a lot of times the buyer is unaware of that balloon payment at the very end. And sometimes that can run them hundreds of thousands of dollars. If they can't afford it, they lose the home and all that money they put into the home leading up to that point.
So this used to be called loan sharking, basically, and it was made illegal, and the mob used to do it. And so we then passed some regulations to protect Americans for whether it was extremely high interest rates that the payday lenders were charging or scams like this where you're lulled into a false sense of security. Oh, come here, come this way. Oh, it's gonna be great in the beginning, and then at the end it balloons and you're screwed and you have no rights, right? The government used to protect you because it used to be a democracy. And now it's not a democracy anymore, it's just an open auction. So right before the election, The Lever, David Sirota's organization, broke a story about Ted Budd, and he was running for Senate North Carolina, he was already a congressman, and he wound up winning that seat. The Democrat in the race didn't use this against him, but he took a lot of money from organizations that drive up interest rates. And then he got them, he pushed for a multi-billion, about a $9 billion break for them. Now some estimated at much higher, but they're just buying our politicians. And our politicians are then telling the regulators, don't regulate, don't. And then they're telling the right-wing media, tell them, oh, deregulation is the greatest thing in the world. Regulation, boo, laws, boo, boo. No, you should let the people at the top do whatever the hell they want, right? So a bunch of people, unsurprisingly, get together and go, oh, this is a fun way to rip off folks. And again, remember in business, they always do math. What I mean by that is they do the calculation, they go, this is this number of people we know we will drive into bankruptcy and we will get to take or steal their home, depending on how you want to frame it. And we make money in the short term, and then we make more money in the long term. And we have to have the financing costs to cover the first year, 10 years, et cetera, until we can rob them of their home, and then our return will be even greater. And so they did that math because that's who they are. And then our regulators that were supposed to protect us were sent home by the corrupt politicians.
Now in Minnesota, this scam has really impacted the Somali community because let's keep it real. I mean, they're immigrants. They might want to move into a home, but the housing market is just astronomical. I mean, normal people like can't afford a home in this country, right? So they get lured in by promises of like an easy policy, no interest. You don't have to worry about being approved by a big bank for a mortgage or a loan. You got this, you got this. And there's a cultural issue at play as well, because based on ProPublica's reporting, when it comes to Somali culture, they're more trusting through these verbal agreements, right? So they'll listen to the lender in this case, which is the seller of the home, and they just assume that the person is telling them the truth. But you read the fine print, and the fine print indicates that they have this insane balloon payment at the end of their contractual term, and there are all sorts of issues that could lead to them losing the house and the money they put into the house to begin with. And this was a huge problem in the lead up to the 2008 housing collapse. This was a widespread method of getting people to agree to these contracts if they had bad credit or no credit at all. And a lot of them got foreclosed on because they defaulted when they couldn't afford that balloon payment at the very end. It's just sick, and there's like very few regulations to deal with it. That's the real problem here, and that's the reason why ProPublica was reporting on it.
In some of the countries from the old days, old country, right? That's what I call, I'm from Turkey and I could consider that old country, right? And there are slightly different culture than here, right? So when I was a kid in Turkey, we were taught loyalty. Here in America,
there's none.
Zero. It's considered actually a weakness in the business community to have loyalty, literally, very, very, very literally, okay? So there are certain things that you're taught in those cultures, and not all of them are good, by the way, but there are upsides to that, and some of the things you're taught are wonderful things, right? And you come here and then you expect honor, loyalty from the person you're dealing with, and you come to find out, no, this is America. Nobody has honor, okay? You have to make sure you read the fine print, otherwise they will definitely rob you.
1000%.
And in fact, the whole system is incentivized to rob you. So be really, really careful. It might be a land of hope and opportunity for some, but it's also a land of robbery where it's not the people who needed the most that do the robberies, it's the people at the very top that needed the least that do the robberies, and they pay off the politicians to make sure there are no cops.
1000%.
So be careful. Thanks for watching The Young Turks, really appreciate it. Another way to show support is through YouTube memberships. You'll get to interact with us more. There's live chat emojis, badges. You've got emojis of me, Anna, John, JR, so those are super fun. But you also get playback of our exclusive member-only shows and specials right after they air. So all of that, all you gotta do is click that join button right underneath the video. Thank you.